There's no reason to become alarmed, and we hope you'll enjoy the rest of your flight. By the way, is there anyone on board who knows how to fly a plane?
The views and opinions expressed on the Avoiding Real Estate Turbulence podcast are strictly those of the hosts and their guests, and do not reflect the opinions of Century 21 Town & Country, Ross Mortgage, or any of their affiliates.
Hey everybody, welcome to Avoiding Real Estate Podcast. This is your pilot, John Lafferty with Century 21 Town & Country.
And co-pilot Tony Abate with Ross Mortgage, and we are your real estate pilots. Our job is to be your real estate advocate and also make sure you're educated about the buying and selling process. We'll keep you informed throughout until we get you safely closed.
In a real estate transaction, there are many reasons why you can encounter turbulence. Today, we are going to talk with a local insurance agent about some of the turbulence you can encounter when trying to get homeowners insurance. Welcome back to the jump seat, Christine Suchoski with Custom Insurance Agency.
Thank you, John.
Good to have you again, Christine.
Oh, thank you, Tony.
Yeah.
So let's jump right in and talk about that PIP coverage.
It's auto. Yeah.
Yeah, let's talk about that first because that's pretty top of mind right now for a lot of people.
Yeah. We're going through some changes here in the state of Michigan. This has been in and out of the courts for years. And what's happening here in the state of Michigan, the PIP, Personal Injury Protection portion of your auto policy is what's in question here. They're looking to mandate your liability limits. What does that mean? What they want to do is you, the policyholder, have an auto-related accident. And they want to know who's going to pay first, who pays primary in an auto-related accident. Are your benefits coordinated? Does your medical pay first? Does your auto insurance pay first? And to be honest with you, you really don't know until you call that 800 number on the back of your medical card for those of you who have medical insurance. And then at that point, you have an option. If your medical does pay primary, you can leave them as primary. If they pay secondary, well, then your auto becomes primary, okay? And then there are those of us who just don't have medical insurance. So auto insurance at that point becomes the primary medical responsibility in an auto-related accident, okay?
So I can understand here and paint the picture. So we're talking about a scenario where a person has typical auto coverage and typical medical coverage, and they get into an auto accident and they're hurt. Mm-hmm. And so medical bills ensue, and then it's a question of, well, you're insured two ways, both through your auto policy and through your personal. Which one's going to write the first check? Is that really what we're talking about here?
Yes.
Okay.
See, personal injury protection basically covers your expenses, your medical care, if you will, recovery, rehab. Let's say there's some wage losses, okay? It even covers funeral expenses, too, okay? But what's happening here in the state of Michigan, our rates are so high because in the state of Michigan, if you were to get hurt, we have unlimited medical for the rest of our life.
On the auto policy.
On the auto policy, yeah. So, but now what's going to happen here come next year when they're rolling this out to you guys, the policy holders, an opportunity to put a cap on that, to say, hey, I don't want unlimited medical anymore. I'm going to put a $500,000 cap on that and take a discount. They're offering you a discount by putting a cap on your medical protection, okay? Health insurance will cover your medical expenses, but then the auto kicks in for all your ancillaries, your rehab, your recovery. Do we have to do something to the house? Do we have to remodel? Okay? So right now with unlimited medical, we don't have to worry about that, but that's why our rates are so high. If you were involved in an auto-related accident right now and you had health insurance as primary, they have a schedule fee, if you will. This is how much we can charge you for the x-ray, $100. But if you have auto as primary, you don't have medical insurance, and you have that same accident, they can charge you whatever they really want to charge you. $200, $300, $400. There is no fee schedule when the auto is paying first. So that's why we're coming in, we have a lot of problems here in the state of Michigan. And to have that benefit, you got to pay for that benefit. And so I look at it and go, I can't put a cap on my family. If something happens and we need oxygen for the rest of our lives, I need to know we're going to have oxygen for the rest of our lives. And not that I'm going to, I have a cap of 500,000. Then what do I do? What do you do? It's different for every household. Maybe an older person looks at it differently and says, hey, I got 10, 20 more years. I'm okay with the cap. I'll take the discount, so every household is going to be different. But this has been in and out of Lansing for years. And we foresee, I hate to say it, lawsuits. There's going to be lawsuits. And that's where the umbrella policy is going to come into play.
How much is PIP right now?
Well, there's
on a
no...
policy? Isn't it $200 or $220?
No, you're talking the MCCA. You're talking about the Michigan Catastrophic Claims Association. The PIP is that personal injury protection portion on your policy in which we carry a deductible. That's based on the makeup of the household. Okay, so what you're talking about is the slush fund that we pay into per vehicle. Okay, that's what you're talking into. So,
so how much would PIP be affected then? If is it going to be tiered or is it going to be specific to every person? So you're saying right now that PIP it's different for every household because it's based on the makeup of the household. So then the discount that they get for electing a lower tier, so it's not unlimited, but it's capped, then for everybody, the amount of savings is going to be different, is what you're saying, basically.
When you say for everybody, you mean everybody in the household or just...
Well, whoever's paying for the policy.
For the policy. Okay, so I'm a family of 5. I have 3 daughters on my auto policy. And let's say I choose to put a cap of $500,000 in personal injury protection. That goes across the board for all 5 of us. And I get a discount of maybe 20%. So my question is,
Hardly seems worth it.
20% of what, though?
Right.
Of the whole policy, of the portion that we're talking of, the personal injury portion? And then what I fear, and I hate to say it, is if you're saving here, but who's not to say we're not increasing rates on the comp and collision end of the policy?
Well, and who's to say that your medical insurance rates aren't going to go up as well?
Okay. Yeah.
Right?
Right.
So take it from here, add it to here.
Yeah, it's just a reallocation of premium. It just, actually to me, it's very scary. I see a lot of lawsuits. I do. And then if you're not properly insured, then what? Then the wages are garnished. Someone's going to sue you. Mm-hmm. They're going to garnish your wages.
Yeah. Mm-hmm.
Well, and it also brings up a question of, so right now, if medical insurers can charge any amount they want for a procedure that's covered by this, if it's, as you said in your example, $100 for an x-ray because insurance is paying for it because they've negotiated those rates, and then with PIP, there's no set rate. They can charge whatever they want. Well, they're charging these exorbitant fees for things done on this side, and if that gets capped, you see a lot of facilities either going out of business or consolidating or mandating that they have to charge more on the insurance end, which is going to make your rates go up again.
Yeah.
The problem is there's no fee schedule for auto insurance. If it was if auto pays primary, in an auto related accident, medical has a fee schedule. You come in, your X-ray is $100. What's the first thing they ask you when you go into emergency? Was this an auto related accident? Right off the bat.
I've never been asked that.
Yeah.
I've never had that.
And I'm going to be a little contrarian here for the purpose of discussion, but one of the things that I see is that when it's an unlimited bucket of money, and yet we all want to protect our family, we would never want to compromise coverage, just for dollars. But when it's unlimited like that, where's the disincentive to the medical community to have any control over their costs? I mean, if they know that there's somebody out there that's going to write that check, put a price tag on it. I mean, whatever, because they know they're going to get paid for that. And somewhere in the middle, there's a happy medium, I guess. But It seems I see problems in either direction, unfortunately.
Right.
The unlimited coverage, causes medical costs or contributes to medical costs going up, arguably. And then if they're capped, is it just going to skew premiums into just another category
Right.
to make up the slack?
Right.
I guess we're going to find out
Yes,
in
we
the
are.
next few years
Yeah.
how this is all going to shake
Well,
out.
and the interesting thing is that the issue of medical coverage is such a hot button topic in the country right now anyway, and it just goes to show into how many things that we kind of associate it with. I need to go to see my doctor for regular care, or I have something catastrophic. That's my medical story. But it's interesting how the auto insurance piece layers into the whole thing and either helps or hurts or contributes or doesn't contribute to that whole machine that's causing costs to be what they are. So I don't have an easy answer. So
I don't think there is an easy answer at this point. I guess
Yeah.
we're just going to find out. It's going to be trial by error.
yeah,
That's just what it's going to be.
I agree. A lot of lawsuits.
Yeah,
I can see that.
Yeah, and so they're going to the carriers, your agents will be sending you documents to sign off on.
Mm-hmm.
We need it documented, that we offered it to you, and this is the choice that you made.
Good advice, though, that you brought up for anybody listening, and that is none of us can just assume that if we need medical care, that our medical coverage is the primary payer.
No.
See, I didn't know that.
No.
I didn't know that.
I wouldn't have thought that, but now I'm going to make a phone call
Yeah,
to find
for
out.
sure.
No,
Thanks.
yeah, no. When I write up a quote, that, and we ask those questions, and 10 times out of 10, they can't answer it, unless there's something they checked into once before. And I say, I'm going to ask you to take a few minutes and call the 800 number on the back of your medical card and just ask them, if I had an auto-related accident, would you, Blue Cross, Blue Care Network, HAP, United Health, would you pay first?
So that's the question
Yeah.
that's how we phrase it.
Yeah,
Would you
that's
pay first?
would you pay first?
I
Would
think
you
when
pay
you go through something
primary?
catastrophic, we just tend to kind of, of course, we take care of the individual, and then all of the moving financial pieces just kind of get thrown in this nebulous hole,
Right.
with the hope that, well, what kind of bills am I going to get when it all comes out the other end?
And so let me, one other thing too, in regards to the medical, I mean, this is huge. The makeup of the household. Yes, I'm, mom and dad and 3 kids. What if you have grandma? Grandma's a driver in the household. Grandma's on Medicare. Medicare will never pay first in an auto-related accident. So what happens here, the policy reads auto primary for everybody.
For everybody.
For everybody. Yep.
Wow, I guess it's time to take Grandma's keys away.
Yeah. Good stuff, Christine. Thank you for that.
You're welcome.
Yeah.
Thank you for that. Yeah, that I thought that was important to talk about.
Yeah.
But let's jump into homeowners insurance
Yeah,
policies.
the real estate
and
side of
let's-
things.
Yeah, the exciting things, the stuff that we get to see and deal with all the time.
Kind of put Christine on the spot, right? Yeah.
We're going to put the spotlight right on you. So,
I'm feeling it.
let's talk about policies. And in the past, I've heard people talk about they've had the same insurer for years, and they've insured the house all this time, and then something happens to the home. Either it blows up in an explosion or burns to the ground from fire, and then they find out I didn't have the right kind of coverage. I just had cash value and not replacement value by today's standard. So can you explain a little bit of the difference between what a replacement cost policy versus an actual cash value
Yes.
policy is?
Okay, so we'll try and keep it simple. Actual cash value, basically what it's saying, what is that home worth at the time of the loss? What's it worth at the time of the loss? Replacement is the rebuilding of the home to put you back the way you were.
So when you say actual cash value, you look at the market and say, oh, this home is worth $350,000. Not that it was, who cares if it's $450,000 to totally rebuild it from the ground up to how it was. you're only going to get $350,000
Right.
for actual cash
What the
value.
market dictates at the
Ooh, that's
time.
interesting.
That's actual
Big
cash
hit.
value. Replacement, and a lot of people, they look at their policies and they look at the dwelling amount and go, my house isn't worth $500,000. It's like, whoa. This takes into consideration putting you back the way you were, rebuilding the home. Labor goes up. Construction, material goes up. What's it going to take to build that home back the way you had it? That's replacement cost. That's what we're talking about. So yeah, your home is worth $500,000. It is. On the market, you might sell it for $350,000, but to rebuild that home, to put you back the way you were, yeah, it could take up to $500,000.
You know, I think when things got skewed during the recession and things went the other way and property values went down, but in the event of a catastrophe or a catastrophic loss, the brick and mortar costs were not tied to the value of the property. And so it's an important look because, to your point, you got to get that house replaced, regardless of what that market value is, high or low. You got to pay the carpenter, the concrete guy, the finish guy. It's got to be put back to the way it was.
Let me ask you something. So I had a client, bought a house in Southfield, it was an investment property, had it for probably 2 years, and it caught fire and burned. And so it was basically a demolition. You would have to demo it, remove it, and rebuild. There was really no saving the structure. She took a cash payout and just sold it for land value. What kind of policy is that? Is that your standard replacement cost, or was that just, what did she have that they're going to cut her a check and she can decide either A, to rebuild, or not, just take the cash and walk?
Well,
She probably didn't have a mortgage, for one thing.
She did not.
Okay.
yeah, and I was going to say, I mean, if it's an investment property, chances she was a landlord. So she was insuring the dwelling only. She maybe had a little bit of personal property as far as the appliances, and you're never insuring the ground. I mean, you don't insure the land. You're insuring the dwelling.
Right.
So she was probably a landlord. She had a landlord policy. And in her eyes, it made sense to take the money. You didn't have to rebuild it. You don't have to.
Curious, though, and I don't know if you heard the tail end of this. So if she had, I hope I don't mess up the terms, cash value or replacement cost, she was compensated, but the dollar amounts may have been very different. Is
Absolutely.
that correct?
Yep.
So even if they don't replace it, if she has a replacement cost policy, which pays for the brick and mortar and everything, and she chooses not to replace it, she still gets the check.
Yeah.
Oh,
It's
interesting.
insured.
Interesting. So she doesn't have to rebuild it, I guess, is what it comes down to.
Okay, and if there's a mortgage on the property,
Well, that's where Tony comes in.
the lender is made whole, and then the owner gets cut a check for the remainder, and they can either choose to A, rebuild, or B, walk away and just sell the land, the
Yeah.
lot, the property.
So that, of course, is a claims question. Okay. And I've not seen it. I've not seen it happen. I'm sales. You got to remember, I'm sales.
Here comes the
It
disclaimer,
is
John.
a claims question, but the big difference, and we didn't see the policy, we don't know how it's written, but actual cash value is basically the market dictates, the area dictates what the value of that home is. So depending on
Okay.
how she had it insured, and yeah, was it replacement or was it actual cash value? And she's in a place where she decided she didn't want to rebuild the home. Maybe she didn't have replacement cost on it. Maybe she didn't.
I think you're right.
Yeah.
All right. What is an extended replacement cost policy or rider,
Okay.
and when would you recommend that to somebody to have? Or is it just included with certain insurers?
When you say extended replacement cost, are you asking me the percentage of what the home is being insured for? So here, let me give you an example. We have carriers who insure your home at 100 plus an additional 50%. There's a cushion in there. Why? Inflation, cost of labor, cost of material. just a little bump. You make updates to your home. So my home is insured for $100,000, but it's insured at 150%. So it's really insured for $150,000.
So is it important when one of your clients, let's say when they bought their house, it had an unfinished basement, they decide to go in and they spend $50,000 and have the whole basement finished with nice countertops and everything. It's important for them to let you know right away when that's done so that you can make an adjustment to their policy?
When there's any upgrades to the home, whether it's a finished basement, you replace the roof, you update, there's discounts, there's coverage that we're looking at. I like to reach out to the clients myself on an annual basis. Any changes in the household? Did we add a pool? Did we take a pool out? Do you have a dog? I mean, this is all about risk and exposure.
Ooh, you brought
liability.
It up. Let's talk about dogs.
Yeah.
So do you have a hit list of the aggressive breeds that
yes.
you can insure?
Some carriers will frown upon certain breeds of dogs. Unfortunately, pit bulls, they're one of them, you know.
It's a pretty,
some will surcharge, and some will say absolutely no tolerance for pit bulls.
They just won't insure.
They just won't insure it.
insure.
Nope.
Okay.
Okay.
Nope.
So on that list, there's a bunch of them. There's like Akitas, Doberman Pinschers, Rottweilers,
Yes.
Siberian Huskies.
Some will ask for bite histories. Have there ever been a claim? So here we go into the clue, right?
Bite histories.
Bite history of the dog, and then it'll pop up in the clue report.
It's funny. I guess.
So, but that would have to be something that would have been reported, I presume, either on a claim or a police report or something.
If
Is
it's
that
been
how that
reported,
works?
yep, yep.
I'll tell
It's
you
like the
that,
dog version of a speeding ticket,
You know,
isn't
we
it?
had
Yeah.
my mother had a wire hair terrier, and he was on a chain and a leash in the backyard, and a UPS guy came around to drop off a package on the back porch. I don't know why. And as soon as he turned his back, dog bit him on the ankle. Drew blood.
Yeah.
He sued. The insurance settled, and after that they said, anything else, and you're uninsurable. If there's another claim against him.
Wow.
So yeah, let me just rattle off a few of the canines that they have listed here, just for the fun of it.
Akitas, yeah, no surprise there.
The pit bull terriers, the bull mastiff,
Bull Mastiff, yeah. Those are
Doberman
big dogs.
Pinschers,
No surprise there.
Huskies, pit bulls, Rottweilers, German Shepherds.
What is a wolf hybrid?
Yeah.
What kind
Wow.
of dog is that?
I don't think
I
I'd
mean-
want to insure that. Yep.
So a lot of these are considered not acceptable, and they're going to require prior approval.
You know what's interesting is they have American Staffordshire,
Okay.
which is code for a Staffordshire Terrier is code for a pit bull.
Really?
Yeah. So you call
Okay.
I don't have a pit bull. I've got a Staffordshire Terrier.
Uh-huh. Okay.
So they've even got that on.
Yeah, and it
Wow.
goes beyond dogs. I mean, exotic animals,
Oh, yeah, like
Yeah,
snakes,
that's-
spiders, Gia monsters,
any livestock or undomesticated animals.
chickens.
I mean,
Yeah. My chickens aren't covered, by the way, so they're on their own.
So if a fox gets in the hen house, that's it.
They are
They're-
on
they're
their own.
done.
And I don't think they pose a risk. I mean, should I be telling that to my insurance agent that I've got these things?
it's not a bad idea.
Are there potential for bird flu?
Not a bad idea. Because think about it, Tony. Somebody comes over and visits,
Trips over a chicken?
trips over a chicken or steps in
Gets attacked by the
chicken mess or whatever, slips and falls. Then what? Oh, now we got a claim. We got liability. So we got to look at your liability. How much liability do you have on that home?
You take those eggs that
have an
they
umbrella policy.
have all
Very
the time,
good.
and you give them to somebody. They eat them and get sick.
That's a good point.
yeah. Because now you're delivering a goods. Yeah.
Yeah.
What's the name of that virus that was associated with chickens?
Oh, yeah.
Was it the H1,
I don't
Yeah,
remember.
that's right. Yeah.
H1F1,
So I need to have
H1G1?
people sign a disclaimer when they take a handful of eggs off my hand. Sign here,
Well,
please.
but then are they coming to the home to pick up these eggs?
No, almost never.
Okay.
Dropping them off.
Because we don't want them to trip over a chicken. Have another claim, right?
Talk for a minute about ordinance law coverage. So let's say that the house is destroyed for fire, and the homeowner says, "I'm going to rebuild," and they want to build the same kind of house, and in that, let's say that where the community where they built, they now have let's just use Minneapolis, for example, okay? So Minneapolis has an ordinance now, a municipal code that says that any oversized lots, you cannot build a single-family residence on it. You must build a multi-residential property on it. So it's either got to be a duplex, triplex, or a fourplex, a quadplex. So you can no longer build a single-family residence. So if you're that homeowner, your house burns down, what do you do?
Okay, well, you're talking Minnesota.
Well, yeah, just as an example, just let's say in any other community here, a community like Detroit says, in order to help have higher density population in areas around, let's say, bus hubs, transportation, so that people can get access to go north to work in, let's say, Birmingham at shops, we require higher density living in these areas. So what from an insurance perspective, is there ordinance law coverage that would maybe cover something like that?
Ordinance
I
law.
twisted myself into a pretzel.
Yeah, you did. Because you're talking about zoning.
Yeah.
You're talking about zoning on how that piece of property is being zoned. Okay. Ordinance law is bringing the home up to code.
God bless it. My whole argument there. I thought I did a really nice job.
Ordinance law.
Crap
Sounded good.
argument. It sounded good, but it's,
And we have
boy,
this-
was I wrong.
But it made me think about
Zoning,
something.
yeah.
Go ahead, but I have a related
on
question.
the home
Yeah.
policies, I always add a percentage for ordinance law coverage to bring the house up to code. Whether it's 25 or 50%, it's very minimal on a policy. But it's a peace of mind knowing that if something did happen, whether it's a partial loss or a whole loss, and right now, let's say you only have 100 amps, and a lot of the carriers do frown upon fuses. I mean, circuit breakers are the way to go. But maybe this is an old policy and it was insured with fuses. But now we have to rebuild the home and bring it to code. That's where the ordinance of law comes into play. So not only are we insuring the dwelling, the four walls and the roof, but you're also insuring to bring the home up to today's standards.
Is that in every policy, or is that something that a person would have to?
It's in there.
Okay.
And you have the toggle switch, if you will, to dictate how much you want. 5%, 10%,
Okay.
25%.
John, you brought up a point that has some practical things very close to where our
Thank you.
offices.
I feel better.
No, you really did. And close to both our offices, we have, close to downtown, many of the streets, typical single-family zoning, but there's duplexes there. They're grandfathered in. The city is saying, you know what, you're fine. We changed the rules after that property was built, but if that property is destroyed, you can't replace it with a duplex. You have to replace that as a single-family home. I think that's kind of a similar scenario to what you're talking about. So what happens then? So I'm the duplex owner. Maybe I live in half. Maybe I don't. I'm not so sure that it matters. Now it burns. I want it replaced. I'm compelled to replace it as a different type of structure. Is there something in the insurance that has to be addressed or changes or anything like that?
No, I mean, we're insuring the dwelling.
Okay. So even if it doesn't have to replace with the exact like kind.
No.
Okay.
This is the given amount. This is how much it's being insured for, less the deductible. I mean, depending on what the claim is. And again, it's a claims question, But what you choose to do afterwards, you have to work within the county itself and how it's being zoned, right? We're insuring the home. And what happens to the home and what you get for the home, you have to work within the area that the home was, that the home is in. The county, you have zoning,
So I guess the end answer is the coverage is there. It will replace a structure even if it's not replaced with what was lost.
Yeah, because it's always changing, right? I mean, areas could be rezoned. I mean, what used to be agricultural is now, residential. Or
The interesting thing, though, is that person may not want a triplex or a duplex. In what you described, hey, I got my single-family home. I'm just minding my own business. I've got a fire, and now I'm compelled to rebuild something that's multifamily. That's an interesting scenario. Yeah.
I love you, man. Thanks. You make me feel so much better.
Reeling me in, baby.
I appreciate it.
Yeah,
So-
but no, it's a compelling discussion. Really, I'm not quite sure how they're going to address that.
Talk about some credits that your company typically offers with different carriers that you have. You're always talking about there's a credit for this, there's a credit for that. What do you kind of see across the board, some standard credits those questions that you ask people to determine whether or not you can get them a discount?
Yeah, and we're talking homeowners
Yes, not car.
insurance.
Not
Homeowners
home-
insurance.
yeah.
One of the bigger discounts is the age of the roof. Okay, so if that roof is within 5 years old, that's a pretty good discount. I've seen it upwards to $200. Now, we might need documentation that we have to submit to the underwriters, but that the roof is important. That's a big discount. Water backup. You got a sump pump. Do you got a backup pump? That's a discount. Do you have a whole house generator? Do you have a backup generator? That's a discount.
Can I stop you on that? So
Sure.
So a house that has a generator, you discount the cost of the homeowner's
There is
insurance.
a discount for that as well. Yep.
What can I ask? How does that reduce claims that an insurer might have to pay out?
You have, you'll never lose power. And then you have surge protectors, right?
Okay.
So you have a backup generator. So you're not, think about it. You get hit with lightning, okay, and it takes out the electrical throughout your
sump
home.
pump stops working.
The sump pump
okay.
stops working, which I can share a personal story about that. I mean, in my first home, I had a sump pump back in August of 2014 when we got all that rain that came down on a Monday night. And I'm selling insurance. I go downstairs. I'm looking at my pump, and it's working. She is working hard, and it's working. But I had to double check. Okay, I could hear it, but I needed to see it. I go back down there Tuesday afternoon. I know my way down, so there's no need for me to turn the lights on. I step down into the floor with my socks, and they're wet. What happened? What happened? Flick the lights on. I got 2 inches of water in my basement, but my pump was working. Yeah, it was working Monday night. It worked so hard, and this is kind of unusual, that it worked itself loose from the receptacle.
Oh boy.
It came loose. Therefore, the pump couldn't keep up with the amount of water, and the water came up from the drains, and it flooded my basement of about 2 inches.
Wow.
Carpet of about 6 months old. And I was one of the smaller guys at the time. So my insurance carrier knew the size of my home. I took pictures. This was all done via email. And I was covered for $10,000. They didn't even come out to the house. They mailed me the check.
Wow.
I got paid to clean my own basement, basically, is what happened. But had I had a backup pump, that would have helped. You know, something that, maybe an alarm, which you can get those as well. Sometimes they come, if you have a whole house alarm system, they offer that too. Or the type where when the water gets too high, it sets off. It's based on the height of the water, you know, so it's battery operated, so we don't have to deal with electrical. So these are all little Benny's questions that we ask. You know, do you have a sump pump? Do you have a backup pump? You know, how old is your roof? These are discounts that come into play, you know, when we're doing a homeowner's insurance quote.
Is there a discount for owning a snowblower?
No. And that falls under personal property, by the way.
Nice try.
So it doesn't matter what kind you have or how big it is or whatever. No, it doesn't matter. But I will tell you this. When writing a homeowner's policy, let's say you do have a pool. Are you fenced in? Is there a fence around the pool? Is there a fence around the yard? You have a hot tub. You got to have a lock cover on it. Otherwise, we might not be able to insure you. I mean, it's all about risk and exposure. And it goes back to the dog. You know what I mean? So, not that they give you discounts, but these are things that they ask when we put a quote together. You know, and especially the roof, though. I mean, that is a big discount, but they want to know how old, you know, roughly how old it is. Some of them say if it hasn't been torn off and put on a new one, it's the second or third layer. We don't want to insure it. We don't want to. Every carrier is different, you know. Talk about a condo. We're insuring from the walls in. We're insuring from studs in normally. But you got to read your bylaws and you got to double check. What are we really insuring for? A lot of people say, oh, I only need $25,000 worth of dwelling coverage. Let's stop and think about this. You have counters, you have cabinets, you have floors, you have tile, you have carpet, you have toilets. This is all property.
Yeah, $25,000 doesn't go very far.
Doesn't go
when you
very
add that up,
far.
does it?
No,
Yeah.
not at all. You might not be insuring the brick mortar, but you are insuring from the walls in. So a lot of times we see the clients who are underinsured. But the more I know, the better I can insure you, or at least educate you to make an educated decision to move forward on that amount of coverage. And the nice thing about condos is you get a discount, a multi-policy discount on your auto for owning a condo as if you were owning a home. So it's basically the same discount, which is nice. So you got multi-policy discounts, you got multi-car discounts, the age of the roof is a discount, you have any water backup, that's a discount as well. Those are some of the major ones that we run into as far as, discounts, on the home. I will tell you on a home policy, what comes into play, territory, your zip code. Where's your fire department?
I was going to ask you that. That was one of my smart guy questions I wrote
Yeah.
down. I said, "Hey, so if you're a house out in the middle of nowhere and the nearest fire department is 25 minutes away, is that going to affect the cost of your policy?"
Absolutely. Yep, fire department, fire hydrant.
Okay.
Oh yeah.
What about your neighborhood? Can that affect your insurance costs?
Yeah.
If you have neighbors who've had a bunch of claims recently for different reasons, will that affect your policy?
So we go back to territory. Now, this is all actuarial, right? They collect this data. We don't see it, us as agents. Okay, it's our job, and we have a questionnaire that we go through, and I ask you the makeup of your household. How much tile do you have? How much carpet do you have? The age of the home, that plays a part. 1 story, 2 story. That plays a part. How many bathrooms do you have? Do you have a basement? Is it finished? Again, to the sump pump. Do you have a dog? Now, let's remember, too, on a homeowner's policy, we're insuring your personal property. Do you have something of value that you want to identify separately? Because there's a blanket.
Like jewelry.
Yep. So let's say your wedding set, and you want to schedule that for 0 deductible from theft or loss. That's in addition to your typical homeowner's policy. So that comes into play too,
Okay.
But yeah, the territory, where you reside.
Let's say I go play a round of golf. My clubs are in my trunk, and my car gets stolen.
Yep.
Does my homeowner's insurance cover the golf clubs?
Yes.
Is there? But I have to pay the deductible.
There is a
first?
deductible. Yep.
So if you got a $2,500 deductible, just go buy.
Yeah,
a new
but
set on
you
your
play
own.
golf with a
Don't
$10,000 set of
So-
clubs, though, don't you? Yeah.
But I'll tell you what, a lot of people,
close.
they're like, wow, I've been paying this insurance for so long. What good is it if I can't make a claim? If you make a claim on your homeowner's policy, it will hang on for 5 years, that claim.
Right.
And you will be surcharged for that claim. And if you decide to leave that particular agent or carrier and go to somebody else, we all see it. We see the claim. It's in your clue report.
That's what you told me.
Yeah.
That's why you couldn't insure me for a few years. She had to wait for that accident to fall off
Yeah,
the report before she could insure me.
Right.
Sneaky
So
people, holy cow. Yeah.
yeah, but I like to encourage my clients to call me first. Let me know what's going on. Yes, you can go ahead and make a claim, but what kind of repairs are we looking at here? Let's get some estimates.
Yeah. If you got a $500 deductible and a $600 repair, goodness.
Yeah, let's
Yeah.
think about this.
Yeah.
Yeah, because that claim can work for you, but it can work against you. And we see it time and time again with the roof. When the hail comes down and they say, oh, my neighbor had all this hail damage. And then the adjuster goes out there and says, well, yes, you had some hail damage, but it was your responsibility to maintain the roof. So you've got some pieces that are missing. We don't cover pieces that are missing. That's maintenance. Or valleys that have issues, that need to be re-tarred, or, or the curling of your roof, or, the separation of the shingles. There is, on your part as a homeowner to take care of your home. So they're not going to come out here and say, we're going to replace that entire roof for you. We're not.
So being in Michigan, does the standard policy cover tornado damage? Or is that a separate thing you have to get?
Natural act of God, yeah.
So would that be just considered wind then, I guess?
Yes, wind and hail.
Okay.
Now, you want earthquake coverage. That's an endorsement. Endorsement is something that you add to the policy.
Hey, that was one of my questions on here. What's an endorsement?
Yeah. Okay, so that's something that you add to the policy.
Okay.
An endorsement could be the jewelry itself. You have something of value, a watch, a ring,
A valuable painting?
Fine art, coins, collectibles.
Baseball cards?
Yep. So, and what we like to do, we collect the data as well. So give me something, give me pictures, give me something in writing, give me an appraisal. Give me something that I'm going to keep on file, that I'm going to also send to the underwriters so the carrier knows exactly what we're insuring. I have a gal who has, I forget what you call them, the crystal.
She's into crystals? Is she from New York?
No. I can't think of the name of it. She has a whole entire hutch full of crystals. And I had to have her send me each piece and the value of that piece that you're looking to insure it for, and send me the pictures so we know, what we're insuring.
So when you're talking about personal things, in endorsements, is there a difference? Is it the same thing with a normal policy where you have actual cost, replacement cost, versus just what it's worth today?
Okay, so you have an agreed amount. You can go with an agreed amount, or you go what it's being appraised for. That's basically your agreed amount, We're looking to put you back the way you were. Same thing with the jewelry, right? You've got a 2-carat diamond. We have an appraisal on it for $10,000. We've got the pictures, we've got the paperwork, and it's stolen or it's lost. Well, you're covered if you have the endorsement. If you schedule that piece of jewelry on your policy, then it's covered for loss.
Okay.
I guess to John's point, though, these are not values that are necessarily static.
Right.
That $10,000, that diamond that appraised for $10,000 at the time of writing the policy, 5 years down the line, and maybe it's more relevant for gold or collectibles or things like that where the values go like that.
Yeah.
How does a person hedge against that sort of thing? Because that number does change.
It does change. Yeah, and that's something that you would want to update. And it's not a bad idea.
You just have to periodically
get it reappraised, because you could have an old policy that you wrote 10 years ago.
So that's the difference between having an insurance agent that asks questions each year when they renew your policy and somebody who just sends you the renewal notice in the mail.
Yeah.
Right?
Yeah.
That's one of the cool things.
Yeah,
about
and it could go on,
Christine.
you could renovations, you could add to your existing home, and yeah, you as a homeowner might frown upon letting everybody else know, but we're protecting you, and we need to make sure we have enough coverage for you.
Yeah.
And I will tell you, in the insurance industry, and I've been doing this 12 years, you typically don't see rate decreases. But what they do is they get creative with the discounts. And so with communication, and I know a little bit more what's going on in the household, you reach out to me. A child left the home, she's no longer in the household, or we finished the basement, and then we spent $50,000, $60,000, and I want to increase the coverage on my water backup. I just had one of those a couple months ago. That's playing it smart, because you just dropped $60,000 in the basement. Right now, I only got $10,000 worth of backup coverage in there. That's not enough. But you also know, as a homeowner, you got to keep your valuables off the floor too. But you're protecting yourself. So you can hide it all you want, but you're only doing yourself a disservice.
Yeah.
You know what I'm saying? And insurance is about protecting your assets, whether it's your home, your autos, yourself, your family, your liability, your risk.
So let's take jewelry out of the equation for a second. Let's talk about for instance, somebody who buys a laptop and wants insurance for it in case something happens to it and it gets fried with a power surge. And so now you got to get a new laptop, and we all know that they're not getting cheaper. So this one was $900 to buy, and to replace it is now $1,300. Covered?
Well, how did it get fried? Where were you?
In the house.
You were in the house. So you had you have a claim now in the home. So it was probably more than just the laptop.
Well, my question is more so, when something like that happens, computer, television set falls over and breaks. It was an older television set.
It's all personal property.
Right. So you have so what type of policy do you recommend to somebody so that if I have a 5-year-old television set and it falls over and breaks, I know that my insurance is going to cover me so that I can go buy a brand new one, and I'm not going to have to take money out of my pocket to make up the difference.
But how did it fall?
But that's not what I'm asking. I'm just asking, what kind of coverage do you recommend? If I'm not asking you a claims question. I'm just asking, what coverage do you get so that it's the actual replacement
cost? You have
cost?
Replacement of your contents.
Okay, that's where I was going.
That's where I got it. Okay.
I was dancing around the merry-go-round.
It's replacement of contents. And contents is usually a percentage of what the dwelling is being insured for. So let's say your home is insured for $100,000. Plus you have that 50% cushion. Your contents is typically 75% of the dwelling. So let's say $75,000. Can I bump that up? Absolutely. You say, I feel that I have a little bit more than that. So, okay, we'll bump it up. And you'll pay a little bit more for that. But now you're feeling better. Hey, my home's insured for $100,000. I have $100,000 in personal property. And it's not the most expensive part of the policy. It's not. And yet it's wise because, again, you are protecting your assets. You know what you have. Mm-hmm. And with replacement and contents, and I personally had a small house fire myself, we had to...
Was that in the kitchen?
No, it wasn't in the kitchen. I'll just leave it as spontaneous combustion. And
was that in the bedroom?
No. No. But it was in an August morning. And, okay, so I'm going to tell you the story. My husband was polyurethane our hardwood floors. I decided to take myself and my 3 kids away for the weekend because... it's a lot of,
stinks.
Oh, yeah.
Yeah,
it's very, very strong. So I thought, you know what? I'm going to take them to the water park. So I went down to Kalahari and we had some fun. On my way back, I'm getting a phone call from my neighbor and she's going, Chris, something's going on at your house. I said, what are you talking about? Immediately I'm thinking my husband's having a heart attack or something. But she couldn't tell me because she can't see the house. What she could see, there was smoke coming out of the top of the roof of my house. Here I am, 3 kids sleeping in the car. I'm on my way back home. I don't know what's going on. I finally get a hold of my husband. What had happened is he had polyurethane the floors that morning. August. Oh my gosh, it was... By the afternoon, he had thrown everything into the receptacle, plastic, which is up against the side of the home, brick home. Well, because it was so hot that day, and then the combustible material that was inside the receptacle lit up like a match. The receptacle lit up, caught the 2-foot overhang on my home, and made its way across the garage. Okay, so I have a 2-car attached garage, and I lived in a ranch. He was on his way to take a nap. He was tired. Didn't know what was going on. He opens up the basement. He smells smoke. Well, the smoke had traveled through the vents into the basement. He's thinking what's going on downstairs until he opens up the garage door to look into the 2-car garage, and he sees flames shooting out the side of the garage. Oh. In the meantime, my neighbor, whose wife had called me, he was on his way home, which he typically doesn't go home during the day, but he was taking the boat home and saw this smoke and decided to come down the street. He grabbed my other neighbor, my next door neighbor's water hose, and he's hanging onto this hose and he's trying to put the fire out. In the meantime, my husband had opened up the door going, oh my gosh, what's going on? He's just seeing these shooting flames. And the next thing you know, we've got 3-4 fire trucks, I guess, that showed up. Now, grant you, I wasn't home when this all happened. When I pulled up, I was so numb because had it been 2 more minutes, I would have totally lost my house.
Wow.
Yeah, all because of the lamb's wool and the polyurethane that had caught on fire, lit up like a match, and it took off and hit the 2-foot overhang, which is wood, and made its way across the garage.
Oh, man.
Yeah, I mean, that was scary stuff. Yeah. So you just don't know.
It happens, doesn't it?
It's happened, and that's why we have insurance. And yes, of course, we made a claim, and we had adjusters come out and all that good stuff. But I mean, so if you got a few shingles missing on the top of your roof, no, you're not going to want to make a claim. That's maintenance. That's something you're going to want to take care of, or your downspouts or you're missing whatever, your gutters need repair. That's maintenance to the home. That's not a claim. Okay. Yeah.
Mold. Pretty big thing here.
Mold.
Is that covered under a normal policy, or do you have to have a rider for that?
A lot of the carriers, again, back to the carriers, do include it.
Okay.
Now, you can talk seepage, though, through the walls. That's not necessarily covered. That's maintenance. So you got seepage, you got mold, you got
there's no
water
policy
backup.
to have for seepage.
Some carriers cover it, some don't.
So
if
you
have
seepage,
a problem,
are you talking like a leaky water pipe?
Yeah,
Okay.
no, I'm talking leaking through the cracks of the walls in your basement.
Oh, okay.
Water comes in through the driveway, comes down the walls, and leaks in the...
Got it.
Yeah, or it's just coming through the actual, the poured basement itself,
But in the you have a shower in the basement. There's nowhere for the humidity to go, so mold develops on the ceiling in that downstairs bathroom. Covered or not covered, do you think?
You need a fan, right? So it should have been inspected. Whoever did the
No coverage. There's
That's
your
what I'm
answer.
saying.
whoever,
Yeah.
right? Are you really going to be able to make a claim? I don't think so.
Yeah.
One of the
No.
things that's interesting that I come across in homes that I look at, and I had this discussion with somebody a while ago, is I'll go into homes and there'll be a bathroom in the basement, there'll be a shower in the basement, and so you'll see the fan on the ceiling. Well, I always go outside and look to see, is it vented properly, or is that thing just blowing the humidity up in the ceiling around, and in which case you probably got a lot of mold in there.
Right.
So I do.
No,
that
that's
kind of
great.
look.
Yeah, that's
important.
Yeah, it was definitely important, right? Because when you buy a home, an existing home, you really don't know what's going on beyond that drywall.
Right. Yeah. And for years, they would just vent this stuff into the attic, right?
Oh,
And
yeah.
if no one's up there, we'll vent it up there, and the problems are just tremendous that it creates.
Oh, yeah. So, and they're to the point now, these adjusters, they can kind of tell how long this drip has been going on. They have tools. If it's an existing situation.
Yeah.
That's a claims question, but I mean, yeah, we've had situations. No, we've had
claims question,
it is
Janet.
a claims
Sorry.
question is for the
Back off of the claims
adjusters.
question.
No, but I mean, it just pays to, one, maintain your home, and two, to make sure that you are properly insured. Go the extra $20 or $30, and have a peace of mind knowing that you have enough coverage, that you're protecting everything that you worked for.
Yeah.
You
Such,
know?
such important conversation. And, you and I have a similarity in our business in that one of our big competitors is online businesses, providers of mortgage or insurance. And what I always come back to is none of that dialogue happens when somebody is clicking boxes and they're shopping online. So what you do with asking the right questions, circling back to people a year later and so on, that's a huge benefit, and it just makes it very easy to refer people to you
Yes,
for what you do.
we
Yeah.
are not the 800 number.
Right.
We're not. It's not cookie cutter. There's not a template for this.
Yeah. So it's a false savings in many cases, right? You know,
It-
somebody might get something online. Hey, I'm choosing this insurance because it's the lowest premium. But what's behind that? That's causing that low premium. And then when do they find out? They find out when there's a catastrophe of
It's
some
too
sort.
late.
Yeah.
Well, most people don't know what to ask, right? They don't know what coverage they should have. And that's where somebody who's an actual insurance agent knows what they're doing, asks the right questions, and finds out about the house. You're so detailed sometimes in some of the questions you ask. Like the last people I referred to her, she called me up and said, okay, they're out of state. Tell me about the house. How big is it? How many bathrooms? How many bedrooms? Tell me about the roof, the age of the roof. Send me pictures. Tell me about the ground. Tell me about the basement. Lots and lots of questions.
Yeah.
Yeah.
Good
So
stuff.
you get very detailed.
Yes, yeah, and you know, we the agents are bound by the underwriters too. I mean, the company wants to know, what are we insuring?
Yeah.
And we are the eyes for the underwriters as well. So those photos, you know, they're emailed over to underwriting. We look at them twice, you know, and 9 times out of 10, depending on what the home is being insured for, we don't have to have the photos necessarily on the inside of the home. But if that home is worth over $750,000, we do. But anything less than that, we do need all 4 sides of the home and the roof. They want to see it. And I do too, though, to be honest with you. I do. What am I actually insuring? You know what I mean?
Well, it just adds to the script that you have with the consumer, right? You're asking questions that are driven by what you see in those pictures. They don't get that with the online providers.
No, and you know, and then even if it's just not the home itself, I mean, just the risks, a dog, liability, you know.
Well, let's be honest. Online shopping for real estate, online shopping for a lender, online shopping for insurance. No bueno.
Right.
You get what you pay for, and people get into more trouble and more situations for either being underinsured, getting a lender where they've got all these big surprise costs at the end, or working with an inexperienced realtor who happens to be the first person to dial a number to call you up from Zillow and be happy to work with you and drive you all over Southeast Michigan, showing you 80 homes because they don't know anything about what they're doing.
Yeah.
They're a cheerleader.
They're a cheerleader. Save the online for the laptop and the washer shopping, not for these big ticket things that we run into.
Oh,
you know.
definitely. Because the home is one of the major expenses, one of your biggest assets. And obviously all 3 of us play a big part in that. There's no joke about that. I mean, you get a feel for what they're looking for. You can steer them. You see things. You're on the property. Like you said, you look for the exhaust fan.
Well, the whole thing is education, right? I mean, that's really what we do, and I think separates us from dealing with somebody online is we're in the process of asking the right questions and educating the consumer so that they can make an informed decision. Whether or not they use you or somebody else, the whole point is to educate them so they make an informed decision. The best decision for them.
Right.
And that's what we do.
Right.
That's what all 3 of us do.
Absolutely. Yep.
But not everybody does that in our industry, but we do.
Yeah, well, but I think that's where we stand out. You know,
Agreed.
again, it's not a cookie cutter. Hey, this is what it is. Bam, bam. We're done. We're not. We're not. No.
All right. Well, I think we'll wrap it with that. Thank you again for coming. It's always good to have you. Christine Suchoski with Custom Insurance Agency. She sat in the jump seat and did well.
How do we reach you?
Yeah,
Christine?
what's a good way to get a hold of you if somebody wants to, their policy's going to expire and they want to check with you and see if maybe they make a move or they're buying a house
Yeah.
or an auto, whatever.
I do work at Custom Insurance Agency, but I like to be contacted via my cell. I mean, that's one-on-one. You get me. And my cell number is 586-255-3477.
Is there an email address too?
There is C, then my last name, SUCHOSKI at custominsuranceagency.com. And I do text. Oh, yes. We email, we text, we do it all. You know, I do it all.
We answer the phone.
Yeah.
We drink margaritas.
When we get really cool with this, we can say, click on Christine's link at the bottom of the screen.
Yeah.
Yeah, and he'll put it right into your finger, too.
That's right. right here.
right
Click
there.
right here.
Yeah, you deal directly with me. I don't have my own admin. I work for myself. I do have support at the office, but I handle all my clients.
Great.
You know.
You do a great job, too.
Thank you.
Yeah.
Thank you, guys. I want to thank you for letting me come back.
Absolutely.
I'm telling you, this is fun.
Yeah.
It is a lot of fun.
It is.
Yeah.
And we provided good information.
Absolutely. Absolutely.
Thank you.
Okay. Thank you for listening to Avoiding Real Estate Turbulence. If you'd be so kind to subscribe and review and rate, we would appreciate it. Please share with your friends, family, and coworkers that they too can find us on Facebook, YouTube, and AvoidingRET.com, where you'll find our contact information and every episode. You can also find us on Apple Podcast, Google Podcast, and Spotify.